beyond fascinating and make my nerdy heart so excited. It helps us understand the difference between housing prices and a hot market. The two are correlated, but they're not exactly the same thing. Over the last couple of months, you've been hearing me talk about a market cooling down, a market softening. And I've been getting a fair number of questions in my personal life, which I love, around, hey, are prices going down? And sometimes as a data person, this can be hard to reconcile because I'm seeing median prices increasing, leveling out, changing upwards in larger contexts, but I'm also seeing houses sit on the market. I'm seeing houses that I think back in March would have gone like that, still up for sale. So, with that question in mind, I dug into the data. I'm looking at the difference between the price a house first has when it goes on the market and the price that it ends up closing at. And again, these are monthly medians, so it's not going to show all the dynamics and all the moving parts. We're just looking at residential in Bellingham, but I found some interesting information and I'd like to share it with you. So our red line here is our median closed price. These are the numbers that I've been talking about for months. Closed median prices. This is where the market's at. This is what houses are selling for right now. The blue line right below it and above it in some cases is what the original list price was. This is what people were saying, hey, we think the market will accept this price. Here's what we're going to list houses for. And I'd like us to notice a couple of different things here that I think are beyond fascinating and make my nerdy heart so excited, because I think it helps us understand the difference between housing prices and a hot market. The two are correlated, but they're not exactly the same thing in the way that I've been using it over the course of these last few months. So here we see our red line for closed sales prices, and barring some ups and downs, because every month will have a different pool of houses closing. Every individual month is not an indicator of the market as a solo. We can see a general trend upward over the course of the last, this is 21 months of market data. A general trend upward from a median price right around the 450s in January of 2020, all the way up to just above 600,000 that we can see for September, 606,000. There's a general trend upward. We're not seeing houses prices dropping. What we might be seeing is a leveling off. So looking from June to July to August into September, we're not seeing a continual uptick over the course of 3 or 4 months. Now, let's recall that inventory is also up in the summer. We've got those 3 digits numbers of houses coming on the market and then closing. It's a high activity month, but it could mean that prices are leveling because we found some sort of stasis for the course of a few months. As inventory drops for seasonality and fewer homes come on the market, we will have to see if there's a tug, if the buyer market has decreased proportionately and we're leveling a little bit, or if the buyer market is still churning and still going and there's fewer houses to sell. We'll see if activity picks up there. Now, our original list price also on the uptick, but we're seeing a gap. Here is where we saw some really fascinating stuff happen from March through May, and because it's reflected in our closing prices, the stuff that happened in March kind of gets reflected in some of May's numbers. So for example, in May 2021, the median house closed at $47,000 above what the asking price was. The months surrounding it were $38,000, $25,000, $28,000, $30,000, a significant amount over asking price, between 4 and 8.8% over list price. Those were the days where if you got an offer in under list price, it was almost seen as an insult if it was a house in Bellingham's core neighborhoods, which is what this data is reflecting as Bellingham addresses. What we're seeing, though, is a little bit of this is where the cooling off factor comes in. It's not that prices themselves are dropping necessarily. It's that the difference that we're seeing between the list price and what the house closes at, that gap is closing. So check this out. March, we've got a big gap. April, a decent gap. May, a big gap. June, a big gap. July, we still have a strong gap. But now we're seeing something happen with these numbers where the numbers are getting closer and closer together. It does not mean prices are going down. It just means that on any given house, the list price is now closer to what buyers are willing to pay, kind of capping out what buyers are willing to pay for that house. Now, again, I've said it before and I will continue to say it. 1 or 2 months of data do not a market make, but this is an indication of a trajectory, and it is in alignment with the things we've been talking about on the Dispatches from the Front series about the day-to-day dealings in our market. We're writing offers, we're listing homes. We have 6 homes on the market right now here with the Cohen Group Northwest. We're in these numbers day in and day out experientially, and the larger circumstantial data across our market is in line with those same observations that we have day to day. So you can tell I love this type of topic. You can tell I love digging into these numbers. If you're curious about any particular other area, neighborhood, price bracket, that sort of thing, feel free to let me know. I'm happy to dig into those numbers. It is pretty time consuming to pull second tier data. This is not data on the front page of the Northwest MLS. I'm pulling multiple streams of numbers and then crunching them to come up with these trajectories. But if you're curious or if you have specific questions, I am more than happy to do that work and find an answer for you. So that was this week's market update, and we'll see you next time. All right, this is the raw data that I'm pulling from the Northwest MLS. You don't have to read it, you don't have to understand or look at it specifically, but I just want to give an overview of this process and then some of the findings we have. We've got the months of January 2020 to the present, September 2021 is our last complete month worth of data. We've got our median original list price. We've got our median closed sales price. We have the dollar value difference between the two. And in red, we can see when the median closed price was actually less than the original asking price. We saw it a fair amount, no surprises, during the first several months of COVID. So COVID began right here in March 2020. Phase 2 kicked in for us real estate agents towards the end of June. And then really in July is when our industry seemed to be truly back to work. One thing to remember with closed prices is you are a month and a half or so delayed from the corresponding list price. So these numbers are a little bit offset from each other because a house that is listed in May isn't typically going to close in May. It will typically close in June. And if it's listed in late May, it'll typically close in July. We can see the same data, it's just in a percentage factor. So we're seeing that in January of 2020, for example, the median home closed 3% less than the median asking price. Again, we've got reds for negatives, black for positives. And here in May 2021 was our peak. The closed price was 8.8% higher than the median list price or the median asking price. And then just for context, I've got a couple of columns over here that show me how many new listings came on the market in that month and how many homes closed in that month. And that helps me account for seasonality. You can't read the numbers, and that's okay, but you can see that we've got a lot of 3-digit numbers here. That is from March to October of that year. And then we're down to the 2 digits for the winter months, which is typically slower for new listings coming on the market. And it happened to be that last year we had a lot of buyer activity, but a slower count for listings. And that's when our inventory squeaked down to, I think it was 0.5 months of worth of inventory on the market. Meaning, given that snapshot at that point in time, if no new houses came on the market and all the houses that had already been listed kept selling at the same speed, we would have ran out of houses to sell in Bellingham in 2 weeks. That's what that inventory number means. So that was December of last year that we saw that, if my memory serves me correctly. But what I wanted to point out is not just the nerdy numbers and the data, it's what they mean.